Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Looking back on Monday's action, we saw something very interesting. We saw that rotation continuing with the Russell up 1.9%, the NASDAQ up 0.2%, and the S&P up 0.6%. This is going to be a continuing theme, as I've been talking about. The other thing that happened in the background is the 10-year moved up slightly. I'm going to cover the 10-year notes in the technical section tonight. There's definitely a very interesting story being built in these markets. Now, once again, we saw vaccine stories coming out, and everything's going to be okay in spite of all the COVID cases spiking, in spite of all of the things that the governors and different mayors across this country are trying to shut down right before a major holiday. It is not having any material effect. And I've been talking to you about this for the last couple of weeks, is the markets are going to look beyond this, and this is what they do best, and this is what we've been seeing for a while. I know you folks are probably tired of hearing about this rotation in the stocks that I've been talking about, but this goes back to July, and things are really starting to get some serious traction, and we're starting to see that leadership, as I mentioned a minute ago, start to really change. And this is significant for going forward. Without this, the economy, the markets, nothing goes forward. We also saw some nice action in the S&P and the NASDAQ, which I'll go through in the technical section here in a few minutes, but we were able to get back above the 10-period moving averages and start to show some positive technicals as this week starts to unfold. One of the big features yesterday was the energy sector, as the S&P energy was up 7.1%. Now, the crude oil wasn't up that much, but we're seeing that trade coming on as well. It goes back a couple months ago. I talked about this capacity trade, and one of the elements that we have to see is the energy sector start to come back. As I've said before, not everything's being run on electric. It's not about Tesla. There's a lot of fossil fuels that are going to continue to drive these economies going forward for some time. Probably, if anything, the biggest story starting to emerge is fuel cells, and they will also be a major player. But as we look at this week, we're going to see more earnings come out. Today, we've got Dell, a couple other pretty major companies. Best Buy, I believe, is going to come out today with their earnings. I don't think this is material, but we did see the PMI numbers also come in better than expected. Now, this is in spite of everything that you're going to hear on the main street is people are telling you that this thing is going to slow down, the markets are going to roll over. That's not what's happening at all. We're seeing just the opposite happening. It does appear that we could end up back in the status quo going forward, because no one really wants to change anything materially while the economy is starting to come back online. So it is going to be very interesting to watch as we come into the holidays. I do expect to have another good day today in the markets and into Wednesday, but then we're going to be in total holiday mode. We'll see what kind of movements we get as we come into toward the end of the week. As I mentioned in last night's video, there will not be a video for Friday. The final video will be for Wednesday, and there will not be a live stream. Don't forget, we have the WaveTech meeting on Tuesday. That's going to be held at 1:30 New York time. Usually that is held at 2:30. This is going to be an hour earlier at 1:30. And in that meeting, I'm going to be reviewing our next level product, which is Portfolio Expert. So make sure that you show up for that. As we come into Tuesday, expect to see more strength in the markets, it moving up towards some key levels. So let's go ahead and take a look at the charts, see what they're telling us. for Tuesday. As I review the WaveTech database, once again, we are continuing to get some solid traction here, as we did see roughly 580 new buy signals with about 250 sell signals. So we had a positive to bullish tone on a short-term database. We continue to grind up here at around 72% bullish. Now the current duration on the trades are at 9.9 and the average duration is 40. So we still have 25 to 35 days in this trade. And as I've been talking about over the past several sessions, with this type of rotation early in the cycle, we're going to see a continuation of the markets moving higher through the next 2 to 3 weeks, possibly into the beginning of the year. There are some seasonal tendencies that will start to come into play as well as we come into the end of November. But the overall database continues to be positive. The implications of the positive database continues to suggest that we will see higher prices. As we begin with the S&P futures, we're seeing them up about 0.5% overnight, up 19 handles. As we look at the market grid, it suggests that R2 is 35.96. So far we've been 35.97, so we've already traded an R2. We're likely to see at least an R3, which would be 36.07. And I believe if we get much above 36.07, then we're going to be running towards last week's highs. Let's take a look at the weekly graph on the futures, see where that number is. That's 36.28. And we also looking at the market grid for this week, anything above a close today above 35.96 will set the tone for an R2 move, which suggests we will retest the highs not of last week, but of 2 weeks ago at that 36.45. So this is starting to look more positive. We have PPM1 on the weekly up 0.82 right now. PPM2 is a plus 0.68 and 0.23 on PPM3. So we're looking at an accelerating pattern as we go forward. As we go to the S&P cash weekly, similar numbers are out there. Last week's high was 36.28. Range for this week being projected, R2 is 36.35. That would be a new high from last week. 2 weeks ago, that was 36.45.99. So we're likely to see a setup that potentially will move this market into new highs. PPMs are very positive across the board, just like on the futures as we look at the weeklies. Going to the S&P 500 cash daily, as I mentioned in the opening comments, we were able to get back above that 10-period moving average. That is at 35.76.16. We closed yesterday 35.77.59. Strength in the futures, we're likely to hold that number. As we look at the market grid on the S&P cash for today, 35.85 is R1, R2 35.94. Looks like we could test R2 early in the session if the strength holds overnight. And once again, just like in the futures, looking for 36.03 to 36.11, and the setup is suggesting that we are going to challenge last week's high and potentially move toward the highs that we made 2 weeks ago at that 36.45 level. Next market we'll look at is the 10-year treasuries. They are continuing to hold above the 0.80 level and looking like they're going to move back towards the 0.9 level. If we do get above 0.9, then we're going to see a further acceleration in this market. The weekly chart suggests that a move above 0.9 will suggest a further acceleration. I've talked about this over the past several weeks, moving back toward 1%, possibly as high as 1.2%. And I believe this is the healthy scenario that is driving the Russell much higher. The next market that I'll cover is the Russell. And we did get an RXT sell signal. And what that is when we get a close above the projected high. Yesterday's projected high was 1809. The close was 1818. Typically, we'll get 1 to 3 days in a sideways range, but it goes down and prints towards an S1, S2 session. Now we close at 1818. S2 is 1805, so we're not talking about a drastic move. S3 would be 1798, which would be the test of 1800. This trend is still very positive, but PPM1 is starting to show a little bit of rotation going on here, but there's still a substantial amount of support around 1770. That will move up to 1790 level in the next 2 sessions. All of the PPMs are very positive as we look at the daily charts. As we go to the weekly, there's still the possibility, and I mentioned this in yesterday's commentary, that R2 is 1832. We've already printed basically that number with a high of 1827. We could see a further move toward 1857, and there is still a possibility, in spite of this RXT sell that we got on a daily chart, of printing as high as 1879. There's some substantial momentum behind this Russell rally that we're seeing on an intermediate basis. The next market I'll cover is the NASDAQ futures. We are up 0.4. We're at 11,953 as we look at the market grid for today. R2 is 11,994. We're just below that number. We're above R1. We're above R1 at 11,947. The number that continues to be in play here is the 11,900. We're back above that number. And yesterday's close, we closed at 11,905. We're seeing some follow through overnight as we're moving up to 11,954. So this is going to continue to trade in this sideways range with an upward bias. PPM1 is turned up to a 0.28, which is very positive. We have not taken out the second derivative as of yet, but it looks like that will be in the play. What we're going to need to see happen on this market grid is it's going to have to turn up higher. So far, it's been maintaining in a very tight range, and it's going to take some more momentum and closing up on the R3, even closer to the RXT number to get that to happen. Now that's substantially higher on a short-term basis, as that's looking at a 12,042 plus close. The weekly chart continues to be the most bullish. We're seeing PPM1 up at 0.89, PPM2 0.68, and PPM3 at 0.63. These are all very positive numbers. Did not think we would get anywhere close to the S1 number, 11,718. The low so far this week is 11,808, the high 12,001. So look at a minimum of an R1, possibility of R2 weekly. So look for more upside on this market as we go forward. The final market that I'll cover tonight is gold. Gold took a substantial hit yesterday, as I mentioned in yesterday's commentary. I did not see any upside in this market at all. It was definitely pressing toward taking out that 1848 level, which we did, and traded down toward the numbers that I mentioned, down towards the 1825 level. The 200-day moving average right now is at 1821. So far, we've seen a low of 1823 overnight, so we're testing that level. As we look at the market grid for today, S2 is 1822, low 23. S3, 1814, 1807. We should hold these levels here. The PPMs are turning negative. PPM1 is now in a downtrend. I knew there was going to be substantial downside pressure if we traded anywhere up toward 1897, and yesterday's high was nowhere near that, but did trade up to 1875. Last time we've seen any numbers in that upper end of the range was about 6 sessions ago when we traded up to 1892. As we look at the weekly chart, we traded down to the 40-week moving average, 1826. It is still rising at 0.16, but is becoming very vulnerable. PPM1 now is a minus 0.73. This is into full downtrend mode on an intermediate basis. My expectation, as I mentioned in yesterday's video, that we would land between the 40-week moving average and the 10-week moving average. It is now at 1892 and the 40-week moving average at 1826, which is similar to the 200-day moving average I just discussed at the 1821 level. I expect to see some bounce here, but there is absolutely no reason to be involved in this market right now. If you're playing it on the short side, that is being played out fairly good here. The downside risk is probably toward the 1807, maybe down to 1787. I would look just to stay neutral. There's a huge downtrend in this market right now, so expect to see this market remain under pressure for the next several days, even though we might get a slight bounce back into the range between 1829 and 1852. But it's going to be a very short-term trade if you even try to do anything with this market. Definitely would stay out of gold right now. Don't see any benefit in being involved at all right now. This will complete the video. Thank you again for watching. We'll talk to you tomorrow night.